Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for November 12th, 2007. Monday has come, Veterans Day has come, the holiday where the bond market was closed has come and gone. And all you see on Wall Street is more blood. And I don't mean to be so dire about it or so negative, but when all is said and done, the market took another hit today. And not just the market itself, but more so the NASDAQ. The NASDAQ, which was the leader. The NASDAQ, which was the champion. The NASDAQ, where Google and BIDU and all these other companies were pushing to new highs every day, up 25 points, up 50 points, every other day it seemed, has now been crushed. And this sell-off, I have to say, I looked at the Qs, and I'm going to show you guys the Qs in a second here, after we just talk quickly about what happened here on the ES Futures, and this is the ES Futures Daily. And you can see, without a doubt, the rollover that's taken place here. A small little bounce, but 4 straight days on the ES. And the ES is not even the most ugly by any stretch. And I just want to encourage everyone before we get into this, come join the chat room. The chat room is phenomenal. We've been very safe here in this market and been very, very safe in that regard. We always preach small losses or profits. There's nothing else. You should always keep a stop, and we maintain that in the chat room, and we push for that, and we encourage everyone to utilize that. And in that doing so, even when the market dumps out here, you know, you're basically walking away, at least as long as you follow our stops and our preachings with minor loss, or tiny losses or profits. And that's the way all trading should be done, especially in markets like this where it's just so rough in many ways. And the same goes with the swing trade alerts. We always maintain stops. Worst case, you're going to take a small loss, and they've just been phenomenal. The day trading chat room continues to be good, and we have a great camaraderie in that room, and the swing trade alerts continue to be solid. And I really treasure a lot of the individuals in the chat room who participate and really help out with the others as well, posting ideas, posting thoughts, and asking questions. It really is a great help. All right, well, again, the ES here, I'm going to show you what happened here, and this is the intraday. The 10-minute intraday, and you can see again late in the day we had a hard sell-off, and that's what happened Friday, and the markets just got crushed, absolutely crushed here late in the day. And again, you can see here the stochastics ending near the bottom, the 20 moving average right here flipping down through the 50 and the 200, which is a bearish signal, and the market just tanked last half hour. NASDAQ ending down 43.8 points, almost 50 points. The Dow, which was not hurt as much, down 55 or 0.5%, and the S&P 500 down 14.5 or 1%. But again, the NASDAQ taking it on the chin for 44 points almost here, or 1.67%, really is the story here we got to talk about. And I'm going to show you some odds and ends here, but let's go right into the Qs, because I want to show you how ugly this chart is. All right, this is the intraday chart. No big deal there. I'll show you a couple things there, but this is what I'm talking about. Let me get out my trend tool here so I can annotate for you. All right, here we are. The markets, ever since that August 16th area where the Fed came out and saved with the discount rate cut on Options X Day on that Friday, and ever since then, just a monster move up. Look at this. Well, guess what? In a matter of 5 days, or 4 days, we could even say 1, 2, 3, 4, almost every rally for the past 2 months since August, almost 3 or whatever this is here since August, has been wiped out. And I'm going to draw this line here to show you guys exactly what we're talking about here. Okay? And there you go. In general, it's something like this. Okay? So you're basically talking about you just have this little bit left to go, and within a couple of days, we've wiped everything out. That is unbelievable. And it continues to be strong selling. We saw BIDU. Let's look at BIDU today. BIDU down 41.5 points. Look at this fall. From basically a high of $429 down to the closing price of $301.50 today, piercing the 50 moving average. Well, the next stop, hey, you get below here. I mean, you might have some support coming in here. And I'm looking, just eyeballing this chart, and you could have some little support somewhere right around here on that low from here over, and you can see there, or you can also have some possible support here. Alright, that's another spot. Alright, so somewhere in here you'll probably find a little bit of a bounce. No market goes straight up or straight down, but there's no doubt about it that that things that are going on in this market, especially in the tech sector, are just getting hammered and hammered away. So keep that in mind, folks, and be very safe here. Okay. Now, you never want to catch a falling knife, and I can't stress that enough. And if you want to take a shot on catching a falling knife, because you have that gut instinct or whatever it may be, then I always encourage use a tight stop. Give it a shot. If it doesn't work out, take the small loss. You'll recover from a small loss. It's the big losses that hurt us in the game, and that's what takes traders out of the game. So I encourage you always use tight stops or stops in the very least. Analyze it before you get into it. Say, this is what I'm willing to take a loss on, and go for it. Because that's the way that you're going to make profits in this game. That's the way you're going to be a winning trader in this game. Okay. Again, looking at BIDU's chart. Let's go on to Google. Google, same thing. From basically $750 down to $630. $120 drop here. Research in motion. Look at this. Look at these charts. I mean, this is almost unheard of. First of all, great topping tail here. Great topping tail. Whenever you get that tail there and a close in the lower 25% of the candle here, and then a break of that low of that last candle, meaning that point right there, it's a dead short, and look at that type of reward you reaped off of that. All right, just unbelievable after that topping tail was formed. Apple got smacked today for $12 on the downside almost here. And again, look at this fall here. Just dramatic. All right, and we've pierced moving averages here. We didn't even really bounce on the 50 moving average today. We didn't bounce on the 20 moving average today. And I'm going to go back to the Qs because it's really important we take a look at this. But here we crossed the 20, didn't bounce. Hit the 50, and we hit below, and then we bounced back. It looked like we might be bouncing and didn't bounce. Then Friday we gapped down. I mean, there's a gap here. You can look at it from the close here. All right. You can look at it here to this point here, almost. Now, you do have that little wick there, but keep in mind that was earlier in the day, and then it closed there, and then we gapped down here. All right, so you do have that little area right here of a gap window, and we'll follow that closely. But at this point, you've cut through moving average after moving average, and what I'm going to look at here is a possible area of support coming in right around the 200 or thereabouts. You could also look at a possible support area right in this area. There are multiple places you can look for support, but in general, this market is just ugly. I'm going to go to the weekly on here, okay? And look at this. All right, last week we came down and we touched the 20 moving average on the weekly Qs, and this is again the QQQ weekly. And then, all right, well, you think, okay, well, maybe we bounced. No, not one bit here, folks. And we took it out today and moved down. And maybe the next stop is here. I don't know. You have the 50 moving average here. You have a general area of support right in this area as well that you could possibly look at where these candles were kind of consolidating here before the next move up. But all in all, you got to be careful in this market, and you can't pick a bottom. All right, I always encourage it's much better to stay in cash, stay on the sidelines, than risk it until you know for sure that a bottom has been reached. So I do encourage that, and just be very, very careful. And of course, as I always say, yes, I urge caution, and that's the right move regardless. But always consult your financial advisors first. As I said, these videos are purely for entertainment purposes and should not be construed as investment advice in any way, shape, or form. Always talk to your financial advisor. But again, the Qs just on the weekly, that is one heck of a move. One heck of a move. Okay? And look at the volume last week. All right, this is the volume on the weekly. Huge volume here. Basically, more volume than we've seen almost in any candle all the way going back, even going back to February's fall, which looked dramatic at the time. If you remember late February, March, it looked like a huge fall. But now look at the size of this fall. Okay? And even in the July fall, you still had a move of this distance, but guess what? In just 2 candles, we've done that size move. So you can even see how it's straighter down. That means it's a more dramatic fall. And here we had the wick right off the 50 moving average. Now the question again becomes, well, what are we seeing? Is there a chance we go back to March's lows on the NASDAQ? And if you think about this is what's crazy, folks, is that we're still only talking about going back to where we were in March on the Qs here, which is not that crazy. And I really want to stress that. I mean, we're going back to where we were in August. If we dip down here, this is the low in August on the Qs. So it's always, you got to take it with a grain of salt, and I think a bunch of you understand what I'm saying here. The markets, yes, they've been hit hard in the last few days, but comparatively to the course of the year, we're still up on the NASDAQ. I mean, here's where the NASDAQ started the year right here on this new line I'm drawing in, and this is where we are now. So even though we've been crushed, and yes, people are hurting, and I'm sure people in portfolios and 401ks, IRAs that had mutual funds that hold these RIMM, Apple stocks, and all this, BIDU, Google, they're taking a hit. But at the same time, you got to look at the yearly chart, and we're not even flat on the year. We're still positive on the Qs for the year by quite a bit, mind you. So again, keep that in mind, folks. And again, I encourage a lot of caution, and obviously consult your financial advisor before doing anything. And here's the Nasdaq, and something I just wanted to point out here was kind of interesting. You had a little M pattern, and it's kind of stretched here pretty long, but at the same time, it's definitely an M pattern. You had a little M here, and then the A formation right there, back to the 20 moving average, and the dump out. Okay, so you had M, A, boom, fall, breaks down. Then you had another bounce back to the 20 and another fall. Alright, so my point here being, folks, is you hit the 20 here, you got a little bit above, but once we closed below, it was the M completion. You got the A, which touched the 20 again, fall, boom, right down. Then another retrace back to the 20, and the whole time the 20 is moving down, so these are lower highs. Alright, you're having lower lows, lower highs here. Here's a higher high, the middle of the M, but then you have a lower one, and a lower one. Lower lows, lower highs, okay? In any case, going back to the Q chart on the weekly, I'm going to switch back to the daily so we can actually see a little better here what's going on. Look at the dramatic fall here. But, you know, it's anyone's guess at this point where we find support.